Don't get fooled by charts like this, by the Bitcoin rainbow chart, by a logarithmic regression that tries to figure out where the bottoms and the tops of Bitcoin are. Don't get fooled by this because these charts do get retrofitted several times. We do see there used to be different kinds of approximations in the past, and even though they do time the bottoms relatively well, it does a somewhat poor job with the tops. Here we exceeded the maximum price. Here we did not reach the maximum price. And especially in 2021, the upper band was way higher than what we actually reached, right? The upper band here being at 87K or so, and the price only reached 69K. Now, the second price top might even be somewhat deceitful because this was not an organic top. This was not just retail buying. This was large institutions buying in November of 2021. So the price here topped, but on-chain metrics did actually not top. So here is November of 2021, and the number of active addresses did not peak. This was not maximum bubble territory. There was actually more activity around May of the same year. So the first peak, April, May, was the organic peak. This is when retail bought in. And the second rally here was when larger players, they bought up Bitcoin. Now you can already see a line over here, and this is different to the line here, because to me it looks like this is overestimating the potential upside. This is overestimating how high Bitcoin can go, because we already see the recent peak didn't reach those high levels. So what if we actually do connect those points? Not with a logarithmic regression, but simply just with a curved line, right? We take this kind of a line, we try to connect all of those tops. And this does work relatively well. When we do that, then the upper limit, in case we see a massive rally, is pretty close to 100K. So this here is a weekly chart, right? In 22 weeks, we could reach 100K. Not saying this happens, but this would be the upper band. And then of course, the further we go out in the future, this can rise, but not that steeply, right? A few more months and we are at 115K or so. So this idea that Bitcoin could reach those 200K or 180K in just a year or two, I think is too optimistic. People are going to anticipate the high, trying to front run that and sell earlier before it's expected to turn around. It's simply a risk versus reward thing, right? Currently, the risk isn't that high, potential bottom isn't that far away, but once we have already risen, right? Once we are in the red area, the potential downside to upside isn't that favorable anymore. So we can connect the tops, can also connect the bottoms. These are two lines with different curves, but dollar cost averaging now into Bitcoin is of course a better deal. Risk maybe 25%, 30%, risk reward 270%. It's a much better deal than when we've already risen. And then it does make a lot of sense to simply just take some chips off the table, even though we might not yet be the potential highest price that's possibly achievable. Now, I always like to look at on-chain metrics as well. For example, the market value to realized value Z-score. So this looks at the market value in blue. So what is the average price in aggregate that people bought Bitcoin for, and what's the current price? And whenever the current price is below the realized price, then the market as a whole is in losses. And so the selling pressure is relatively low. People simply just wait until they get into the green again to sell again. You don't have to sell. You're not going to sell at these kinds of levels simply because long-term Bitcoin appreciates, right? It inflates less than fiat. Once we are above the realized price, that's when we have to consider potentially taking profits. Now, again, similar to the Bitcoin rainbow chart, timing the tops isn't that easy. The recent top, it happened at a lower value than the tops before. So there seems to be somewhat of a decline here, how heated the market can potentially get or how far the price can get away from the realized price. This orange line here adjusts for the standard deviation of the market cap or the volatility. So the more volatile Bitcoin at the time is, the more it's allowed to shoot above the realized price. So that way we try to adjust when Bitcoin was just very small, was just worth a few cents. We try to adjust for this heightened volatility to allow for more of an extension to the realized price. We are still very far away from potential peak, obviously, but I would also not expect us to go again to 7 or 6 in terms of market value, realized value, z-score. We could very much turn around at a 4 because people simply anticipate profit taking and try to front run the absolute peaks. It's much easier to buy the bottoms than it is to sell at the peaks. The price is for a much longer period of time at those bottoms. You can simply just buy for many, many months. But if you want to sell high, you don't have that much of a time frame to sell high. Usually the price isn't at these elevated levels for a long period. So it can be generous with buying. You don't have to time this too much, but you have to be very, very aggressive in selling whenever we see a run up. You can also use something like the realized total ratio. So simply just look at how much trading activity is happening within the last week versus the last 1 to 2 years. And here the picture is also similar. Recent top wasn't as extended as the top we saw in 2017 or the one in 2013. And this might be a long-term trend. You can see this in all kinds of metrics. What we have, for example, here at the bottom, this is the extension from a moving average. So look at this moving average over here. It's the 52 week, so 1 year. And what we have here at the bottom is the extension from that moving average. So this is the code here, right? So the closing price divided by the moving average. What's the multiple, so to speak, of the price above the moving average? And when this is at 0, we are just crossing the moving average. So over here, let's zoom in. We've just crossed the moving average. And so this line went above 0. And this is simply just looking at how far is the price currently away from that moving average, or how much extended are we from the moving average. We can see how each of those cycle tops, it tends to top out with less of an extension from the moving average compared to the prior tops, right? How the price action is more and more muted. Now, what that would mean is that if we do want to see those 100K, we likely have to grow much slower in the price. Because let's say we would be peaking out somewhere around here, so at say 1.33, the current moving average, which is at 23,400 roughly. 1.33 of an extension would bring us to a price of 54,000 only. So that would be around here. So this is in case we move up in the same pattern as we did before. So nobody can time this perfectly, but what's important is you don't want to be the person that buys low several times, that dollar cost averages nicely, but that forgets to take off risk, to take profit when we are going up. You don't want to wait for the 180, 190K Bitcoin, because there are plenty of models that show that we could peak out much earlier, be it the extension from the moving averages, be it the market value to realized value z-score, be it the Rodel ratio. All of those cycle analysis tools show us that Bitcoin becomes more and more mature, and that thus the price swings also slow down. So the best way to navigate this, in my opinion, is to obviously buy low when the price is still comparatively low, which is currently very likely still the case. But to also, once we appreciate, look at your overall portfolio, look at what kind of capital do you have in stocks, do you have in real estate, do you have maybe in precious metals. Then make sure that even after a run up, the portfolio is balanced enough. That if Bitcoin doubles, you don't overweigh your crypto portfolio to the rest, but that you actually shift money to the asset that hasn't yet performed to the same degree. There's another video discussing Bitcoin rather on a shorter time frame. Looking forward to see you in that video, and thanks for watching this one. Bye bye.